You don't need to be a millionaire or own luxury condos to make a fortune in real estate. Forget the risky advice from internet gurus. Lasting wealth is built with a much simpler, safer strategy. I built my own portfolio by buying small, affordable, and yes, boring rental properties. These are regular homes in everyday neighborhoods, exactly where you should start. You don't need a huge pile of cash, you need the right knowledge and discipline. This video is your roadmap. I'll show you why cheap houses are your best friend, how the math works, and the steps to buy your first property. This isn't a get-rich-quick scheme, it's a get-rich-for-sure plan, built on patience and smart decisions. We're playing the long game. Tenants pay your mortgage, property values rise, and your cash flow grows. If you've dreamed of financial freedom but thought real estate was out of reach, this is for you. By the end, you'll have a clear, actionable plan to start building your own real estate empire, one small rental at a time. Earning $100,000 a year from rentals isn't a fantasy, it's an achievable goal. Most new investors chase luxury properties, but the real money is in modest, low-cost homes in working-class neighborhoods. Their biggest advantage? Low purchase prices, smaller down payments, manageable mortgages, and less risk if you have a vacancy. With $30,000 you could buy a $150,000 starter home with a safe mortgage, instead of stretching for a risky, expensive condo. Affordable rentals have a massive, stable tenant pool. Demand stays strong even in downturns. People always need a place to live, making these properties reliable income generators. They're also easier and cheaper to maintain. No fancy amenities or expensive repairs. You avoid complex HOA rules and high-end headaches. Lower costs, steady demand, and simple management make these properties the perfect foundation for real wealth. They're not glamorous, but they're essential. And that's what makes them profitable. Focus on these overlooked homes to minimize risk and maximize returns. They're the bedrock of a low-risk, high-return rental strategy. Start boring, build wealth. The most successful investors don't flip, they buy and hold. Buy and hold means you rent out properties long-term, letting them work for you in 4 ways. First, monthly cash flow rent minus expenses equals profit in your pocket. Second, your tenants pay down your mortgage, building your equity automatically. Third, over time, property values tend to rise, boosting your net worth. Fourth, tax advantages: you can deduct expenses and depreciation, lowering your tax bill. This slow, steady approach creates passive income and long-term wealth. Buy, hold, and let your investments do the heavy lifting. How do a few small houses add up to $100,000 a year? The math is simple and repeatable. Let's say you buy a $200,000 home, put 20% down, and your total monthly expenses are $1,590. You rent it for $1,900, leaving $310 in monthly cash flow. Plus, about $300 of your mortgage payment goes to principal each month. That's $610 per month, or $7,320 per year, in total profit from one property. To reach $100,000 a year, you'd need about 14 similar properties. It sounds big, but you start with one, then use cash flow and equity to buy the next. Over 10-15 years, disciplined investors can realistically reach this goal. It's not about one home run deal. It's about steady, consistent growth. Each property is a building block toward your 6-figure income. Focus on the process, and the numbers will add up. That's the power of simple, scalable math. This strategy thrives in stable, high-income countries like the US, Canada, UK, and Australia. These places have strong rental demand, growing populations, and a culture of mobility. You benefit from mature mortgage systems. Long-term, fixed-rate loans lock in your costs as rents rise. Legal stability protects your property rights and investments. Steady economic growth and long-term appreciation give your portfolio a tailwind. While markets fluctuate, the overall trend is upward. Cash flow, debt paydown, and appreciation work together to build wealth. In the right country, this strategy is a proven wealth-building machine. Ready to take action? Here's your 4-step blueprint. Step 1. Focus on one affordable neighborhood. Become an expert there. Find a below-market property that needs cosmetic work but is structurally sound. Step 2. Secure smart financing. Get pre-approved and consider owner-occupied loans like FHA for your first deal. House hacking, living in one unit while renting others, is a great way to start with little cash. Step 3. Screen tenants carefully. Run credit and background checks, verify income, and call previous landlords. Good tenants make your life easy. Bad ones cost you money. Step 4. Reinvest your profits. Save every dollar of cash flow for your next down payment. Let your first property help you buy the second, then the third, and so on. This is compounding in action. Each property accelerates your growth. Stick to the plan, and you'll reach your $100,000 goal faster than you think. Consistency is key. Start small, scale up, and let your portfolio grow. We've busted the myths and laid out a clear, repeatable path to six-figure real estate income. The biggest obstacle isn't money, it's fear. Fear of the unknown, fear of mistakes, fear of debt. The only way to beat fear is with education and action. You've already started by learning the strategy. Now keep studying your local market until you're confident to act. The journey begins with buying your first property. It's the hardest, but also the most important. That first deal will teach you more than any book or video. Once you succeed, the next properties get easier. Don't just watch. Open a savings account, analyze deals, talk to a mortgage broker. The power to change your financial future is in your hands. I'm offering a free rental property calculator. Click the link below to start planning your path. Thanks for watching. Now go build your future.